Hi there, welcome to another live webinar or Fireside Chat rather with Phillip Futures. With us today, we have a very special guest from CME Group. He is none other than Chris Fix, who is also the MD for CME Group. And with him in our second Fireside Chat is none other than the CEO of Phillip Futures. His name is Che Chern. All right, what are we talking about today? Let me just dive deep into our topic of today. Of course, the overarching topic is beating inflation with the US market. Some key pointers that we intend to cover. Well, as we know, commodity prices have been rising sharply with a change in consumer spending habits worldwide during the pandemic. Shortages of shipping containers have led to worldwide disruption of supply chains. All these have sent inflation rates soaring. So the key talking points for today: will rise in inflation prove transitory? What will central banks do with rising inflation? Consequences of rising inflation and the impact to the market? And how do you, the trader, investor, benefit from higher inflation? There's a silver lining in every situation, and our wonderful gentleman will be walking us through the silver lining. And who are we with today? A gentle reminder. First is we have a special guest from CME Group. He is the Managing Director and Head of Asia Pacific. He is responsible for leading CME Group's initiatives to expand its presence in the region, including its partnerships with regional exchanges, delivering a growth strategy, and developing benchmark products and services to meet the needs of current and prospective clients. He is none other than Chris Fix from CME Group. Welcome, Chris. Are you on mute, Chris? Next up, we have our CEO of Phillip Futures. Yes, we can hear you, Chris. Welcome to today's show.
Thank you so much. I'm really excited to be here.
And firing away with all the questions to Chris Fix is Mr. Che Chern, the CEO of Phillip Futures. He oversees the operations of Phillip Futures Singapore and is actively involved in the business and management of group companies, derivative entities in the region. All right, Che Chern, thank you for joining us today as well.
Hi, thanks.
All right, I believe you have a story for all of us, and if you're all set to go, let me hand the reins over to you. Che Chern, please.
Yeah, thanks, Sri. Yes, thanks for those participating, joining us this evening. Thanks for joining us. It's 8 p.m. Singapore time, and I'm really appreciative of our friend Chris, who is in Chicago at the moment. That's like what, 7 a.m. in the morning? Is that correct, Chris?
7:03. Yep.
7:03. Yeah, it's nice of him to wake up so early to join this session. A few weeks ago, we had a first session of the Fireside Chat, and that's very much with Singapore in mind. And today is good that we have Chris from CME Group and sharing with us some of the perspective of inflation in the States. I remember a few weeks ago when we covered this topic, right? Chris, one of the things that I shared with them was that having grown up in Singapore, we have seen the price of coffee, a cup of coffee, increase in price from like 120 to 180, and then the plate of chicken rice increasing from like 150 to easily like $3.50 or $4 nowadays. So that is the part whereby inflation in a way has affected us. So I remember our lunch meeting in Singapore was just before the heightened alert, right? That was like a few months ago. We have since gone back to the US to visit your family and probably have a better view of the environment in US. So I think it's timely. After understanding the market in Singapore, today we hope our audience can learn from you of the impact of inflation in the States, as well as the opportunities that's available. Okay, now Chris, maybe for a start, right, I just want to refer to the most recent article in The Economist. It put down that in January itself, someone in States can buy a 3-year-old Camry for $18,000. And for the 6-liter petrol, he will need to pay $28 US. But in May itself, the same car, 3-year-old Camry, you probably need to pay $22,000. And the gas has also increased in price by 27%. So with all this like increase in price, we know that it could be a bit like supply chain disruption, or there's a greater demand, more money chasing after things. So perhaps, Chris, you can share with us a bit on the inflationary impact in the States, and whether your feeling about this, is it for the time being, is it a transitory, or is it going to be a long-term impact?
Yeah. Well, I think, yeah, those are really fascinating questions. And again, like you said, you and I were in Marina Bay Sands having a lovely lunch. Unfortunately, the next day we wouldn't have been able to have done it. So, you know, in the States, everything's open. I went to a baseball game with my kids recently. I don't know, 15, 20,000 people there. You know, you have a slow opening. I'm in the Chicago office, like you said, I'm a few blocks away. Yesterday was their first wave of reopening. They had the essential personnel in there, but right now, this week is the first wave, and over the next 3 weeks, they will increase. Our CME offices will increase up to 30%. You know, and it's interesting, about 40% of the stores in the area right around the CME office in downtown Chicago are still closed. Half the Starbucks aren't open. So things are starting to recover. So we're in a really preliminary, but, you know, we're moving to recovery. You mentioned a little bit about the cars and the gasoline. You know, I think what we need to do, and what I wanted to say today was, especially from the individual investor perspective, there's two pieces to inflation. There's the micro story and the macro story. And I think both of them are really worth understanding, especially as you go to make an investment yourself. And you're looking at whether you're going to invest in crude oil or gold or any of the other products that are going to be impacted by both stories, the micro and the macro. So if we look at the cars, you know, that's something that, again, you know, a 3-year-old car is going to sell more today for when it did when you took it off the lot. Now, every one of us, when we go buy a car, you know, as soon as you drive it into the street, it's plummeted by 30%. Well, this situation grew by you know, a certain set of conditions, which is heavily impacted by COVID. So everything we're going to talk about today has to really be viewed through that lens. When we look at the inflationary cycles of the 70s or the other periods that we could go back and see, they didn't have the same backdrop. So in the case of the vehicles, what happened is that the massive car leasing companies, which are the rental car companies, all canceled their orders last year. You know, Hertz went bankrupt, travel stopped, people weren't renting cars, airline travel stopped, therefore there was no need for the travelers when they got to the airports to rent the cars, and it just put a total freeze on new car production, and it dramatically impacted the US domestic car market. So what happened is there were none of these vehicles coming in to the used car market, which is what they normally do. You know, the companies will rent cars for 3 years, they'll lease them, and then they sell them into the used car market. And that's what happened. There were no more used cars. There were no new cars. And it created this premium for used cars that you just talked about. And, you know, even today, I have a used 2012 Honda Civic. You know, just had it always in the States to drive around over the summer. And I keep getting calls. People want to buy it from me. But I think that's temporary. So, and a lot of the things that we're going to talk about today, again, maybe also with crude oil, you know, looking at where crude oil has gone. Yes, it's doubled in price, you know, since about the middle of last year. But again, we see the turmoil in OPEC. We see that international travel hasn't really recovered yet. There's a lot of concern around the Delta 19 variant, what that's going to do. Are the corridors going to open? So within each of the stories, I'd like the investors to think carefully about the micro side and the macro side. But let me tell you a few things that I've seen and experienced since we're talking about the U.S. My daughter, she's a freshman, and we have a condo down in Washington, D.C., and she's a lifeguard. And she got offered $16 an hour, which is the top lifeguard rate to be a lifeguard. And she was so thrilled because there's no lifeguards. There's a labor crunch. I'm in the hotel right now in Chicago, nice hotel, the W Hotel. It's probably half a kilometer from the office. There's no room service here. They don't have enough labor to work the kitchen, to send food up to your room.
Wow.
And I was in upstate New York. My family's from upstate New York in a town called Albany. And I came down at night, and they have a lovely bar. And I asked the manager, I said, is there a bartender? And he said, no. He said, we are putting all of our efforts to hire people for the cleaning staff, for the people to clean the rooms. He said, business is starting to recover. We have demand for rooms. He said, I don't have the luxury of being able to put a person behind the bar because I need people to clean the rooms. And these are the things that are really happening that we can see. Also, I couldn't get a flight. So I wanted to come to Chicago from this city called Albany, and it's the capital of New York State, so it's not a small town. But there were no flights because airlines are also struggling to get crew back to service the flights as the demand continues. And those are all micro stories, but there's a macro story. And that macro story is the U.S. stimulus package, which still, to this point right now, the Biden administration signed the huge stimulus package, and people are being paid a lot to stay home. So they have the extended welfare benefits or unemployment benefits, and then another $300 on top of that. So it's normally around $600. They get another $300 because the Biden administration, they agreed to continue the stimulus. So there's a debate, and we don't quite know yet whether people are saying, hey, I can make $900 a week by staying home. Why should I be a lifeguard? Why should I go work in the hotel? Why should I be a bartender? We're going to see very soon that many of the states, and about 12 states in America, have cut those supplementary benefits to try and get people back to work. And everywhere you go now, you see bonus, hiring bonus. People are being, $2,000 to come work at a restaurant, and it's quite striking. But I think we're in a transitory period, and this is going to be an important week. And I think the investors should all know that today's a huge day in the United States with the CPI data coming out, which is of course the inflationary data, with the Fed meeting to discuss the impacts of the data and to testify over the next couple of days about what they think the state of the economy is. So you couldn't have picked a better day for us to have this conversation.
Well, Chris, thanks for enlightening us. I think in Singapore, it's almost can't imagine. What I'm hearing from you is that you probably earn more by not working than to be working, right? That's one thing I hear from what you mentioned about the stimulus package. Then the other one that you mentioned about the car, you have been in Singapore long enough. You know that the COE is the one that is always determining the price of the car in Singapore itself.
Yeah.
So it certainly is a very, very different environment. I remember last year, last April or March, last April, we are talking about negative crude oil or close to zero crude oil. Now we are talking about 70 plus has been very high rates crude oil prices. So thanks for letting us know from this perspective. But in this aspect, right, one of the things that in Asia itself, we have been seeing savers are complaining. Very low interest rate. You put your money in the bank itself is almost like close to zero. although we are hearing more and more about talks about inflation, government's going to do a preempt of the interest rate hike. Over the last few weeks, we probably heard a bit on Russia, Brazil, and lately it could be Mexico. These are the countries that are concerned about inflation. But we know that in Asia, a lot of all this, we call it tapering tantrum. Or are we going to see an interest rate hike due to this inflationary environment? So perhaps, Chris, can you shed some light on the how the Fed is going to move? Are the central bank in US going to change the interest rate outlook and react to it anytime soon?
Well, I mean, I think that the central bank has been the Fed has been very consistent. That their message, and I really give them a lot of credit for this, is they've been saying for months and months and months that they don't believe that these inflationary incidences that we're looking at and we're adding up are going to be long term. And again, the example of the cars, there's another one that's really good, and I think we should talk about is lumber. We saw a 300% increase in the lumber prices, and now for the past 6 weeks we've seen a decline, and now lumber prices are down 55%, but they're still up 84% if you look at the price of lumber in the beginning of January. So you've seen a huge swing. Up 300%, down, down 55% in the last 6 weeks. And this is, again, another signal of where you see the kind of accordion, right? Sometimes when you're driving along the road and you see a traffic jam and there's cars that are all together and then they open up again and then they come. So a little bit like that. And what we're seeing is that there was a backup because the lumber mills couldn't process the lumber and they couldn't get it into the shops. And then that impacted everybody who was also staying home and doing their own do-it-yourself projects because there was nowhere to travel. So now, you're seeing this again play out where they're saying that the bubble has burst on the lumber prices. So the Fed is saying, look, we think a lot of the issues around commodities, around these purchases and supply chain bottlenecks are transitory. And they're going to keep their eye on the CPI, which is meant to be something like 0.6%, 0.4% increase today. So I want everybody to keep their eye on that. If it's more, it's leaning towards continued inflationary pressures. If it's less, it's talking a little bit about what the Fed is saying, which is, hey, we've seen this book before. We don't think it's going to be long-term impact. We think that we're going to hold on our tapering or our bond purchasing policies for the moment, and we need strong systemic evidence of something to the contrary. And I think for investors, this is a great opportunity to watch that number closely, because if it comes in at a low number, that means it's going to be bullish for equities. And that means you want to be buying CME's S&P products. You want to buy the micro equity contracts. You want to go in and say, what do I think about this? I think, and I'm going to make a decision because it's going to be bullish for stocks. And I think that there's going to be an opportunity. And on the other side, if the number's higher, then this is an opportunity to say, hey, you know what? I think this could be a signal that we are seeing more systemic inflation, and I have to be careful with what I'm going to do, and maybe it's time to sell, or maybe it's time to do something else. So each individual investor makes a decision about what they're seeing in the micro data and the macro data, but when you're looking at the central banks, their interest is to try and not necessarily be too concerned about every inflation print, but to see about the health of the economy. Are we adding jobs back? Are we seeing the kinds of things like shops opening, like people returning to employment, like pushing the economy in the direction of strong growth? So their thought process and ours, and I'm an individual investor too, are very different. So I think that each person needs to look on that level and say, what am I seeing in the market? All right, I can see those signals. What does it mean to me? Is this a bullish signal? Is this a bearish signal? And I think that, with the platform they have at Phillip, and the products we have at CME, there's a great way to express those views.
Yeah, Chris, I mean, when we look at the US market, it has been very well performing over the past 1 year. In fact, I think up to this week and last week, it has been almost like record high.
Yeah.
So totally, if let's say the inflation figures that were to come out tonight shows that the inflation is not as fearful as it should be, then it seems like we are going to see more optimism in the marketplace.
Yeah, and you know, you're right. The market continues to shrug off a lot of concerns, and the market is starting to believe the Fed story, and also not being so concerned about the variant, you know, the variants, and also the continued pressure that Asia is under. And it's difficult, right? Because of course, again, you know, I've had 17 years of my career in Singapore, and you know, work in the office with my colleagues and my you know, professional friends, and I understand, and we know much better what it's like in Malaysia and Indonesia and Japan and Korea and Australia. You know, those are things that we look at every day. I don't have a day I don't look at Channel News Asia, but that feeling does not exist here. People don't feel that at all. And there's a big feeling that, hey, I'm going to go to my lake house, taking that break I haven't taken. I'm going to spend some money that I haven't used. Savings rates in the US are higher than they've been in the last 20, 25 years. And, you know, that's also another thing, which probably is on the back of COVID, which is we're probably going to see more spending that we wouldn't normally see. And again, that's going to roll into the stock market when you start to see, you know, vacation rental by owner, you know, some of the growth stocks. And what's really fascinating, and again, I leave it to your investors, because I'm one too, is are we going to continue to see the rise of the tech sector? Because that's shrugged off a lot of inflationary pressure. You remember a couple of months ago when the 10-year bond started to print 160, 170, everybody got out of Apple and Amazon and NASDAQ. Well, you know, yesterday they printed record highs again. So this is the most interesting period I think I've seen as an investor and a market follower in the last 10 years, because we're seeing a confluence of these factors. You know, are we seeing a breakout recovery in the US? Are we going to be dragged down by things like the COVID variant? And we're seeing an increase in cases in the US, quite dramatic actually. You know, about a 40% increase week on week, because there are still a lot of unvaccinated people. So every one of those things is a really awesome point for our investors to look at and say, all right, I don't think that's going to be significant. I'm going to go and buy the S&P, or I'm going to go and get a NASDAQ, or put some options on. And I think this is why this is such an exciting time to be looking at these things.
Chris, the more you talk, the more I feel jealous, because you can mention about going from New York to Chicago to don't know other towns, and you can talk about going to the lake house. You know how big Singapore is, right? Most you can travel is from Jurong to Changi. That's about what, 40 kilometers?
Yeah. I did take a boat ride out to the islands once, and that was nice.
Yeah, that's right. And certainly it's true that Singapore has been managing the whole situation quite well.
Yeah.
We can't say the same for other neighboring countries around Singapore. Yeah, and of course, the other aspect that I would like, since you are just back in US, there's a lot of talk about the, you know, property prices in US is you know, has jumped quite a fair bit, right? Of course, some are saying that it's because from the city they went to the suburbs, and because more are working from home, they buy the homes in the suburb, pushing up the price. Certainly in Singapore, again, from the city to the suburbs, or rather there's no suburbs to begin with, we're talking about 20 kilometers. How do you see the prices in the US, property prices? Is it really booming like those based on the news report that we hear in Singapore? Or is it like very much the suburbs are increasing faster than the, you know, city center? Yeah.
You know, it is a property boom. There's no way around it. We've seen single family homes increase dramatically all over the country. I come from about 100 miles north of New York City. That's my hometown. And I bought a little house for my mom, and she's got a little place with her dogs, and, you know, try to be a good son. It wasn't very expensive. That's gone up by 30%. Just this little house, 100 miles away from New York City. And again, it's
30% over like a year, or how long is this period?
I'd say since I got my last property tax bill like 2 years ago, there's been a dramatic increase, and it might be, you know, but yeah, it's gone up a lot, and that's probably the furthest push, because people who are saying, look, I don't need to be in the office, I don't have to work from home, I can work from home, I can work from anywhere, and this is the phenomena that's happened in the areas that I'm aware of, which is New York, Washington, and even here in the Chicago region. However, and this is the big however, is that that's starting to turn, and starting with the office policies. You know, Goldman Sachs in New York City mandated everybody to come back to the office and to be vaccinated. So, you know, and they're big power players, and that meant that a lot of people who thought they were going to be able to do their big deals from their country club in Florida and elsewhere cannot. Also, it's been apparent to some of the big financiers in New York that you still have to do the big deals face to face. So the guys who are down there on the golf course in Florida are missing the big deals. And the other thing is, and I think we've all seen high profile people like Jamie Dimon say, I'm not going to pay New York wages if you're living in Vermont, if you're living upstate, if you're living at the lake house. So it's becoming, again, right now, the perfect transitory situation where offices are opening. As I told you, CME is opening. I found, and we were able and lucky, because Singapore's managed the situation so well, to get up to 30% in our office in Singapore. And of course, the government at that point was allowing up to 50. And I believe, with, again, seeing the numbers come off for the most part, and how Singapore's managed, you know, the situation over the last few weeks, we're going to be back there sooner than later. And that difference of having that critical mass made a huge difference to us at CME in Singapore, and it will do so here in New York and Chicago. And I don't think other companies are going to miss that example. So the pressure on prices is abating a little bit, because the euphoria of everyone saying the work environment has changed forever is tapering, and people are starting to realize that they can't earn New York City wages living somewhere else. And again, it's not a lot different in terms of the cost perspective for Singapore and New York. You know, people aren't going to get away with being able to say, I'm going to live at my country house. And even me, I'm here, and I've seen 3 senior managing directives and 2 C-level executives, and they're all in the office here in Chicago. So there's a message being sent. I think it's going to be one that corporate America is going to listen to, and I believe that there's going to be the deal-making pressure to bring people back, and that's going to bring some of this property boom down a bit.
Okay. Yeah, I thought they were in the office because they just enjoy to be inside the work in the office environment. Yeah.
There's a lot of that, and I think we've been lucky in Singapore because we had a sustained period of being back in the office, and then these guys are just turning their computers on for the first time after 18 months and starting to experience that again. So I think the trend is more coming back to the office than the other way.
Okay. For your information, I've been working in the office since this whole period. And after a while, really, you miss your colleagues, but I'm not sure whether they miss me. It's one-sided. Okay.
I'm sure they do.
Yeah. So thanks for letting us sharing with us on this US environment, because it's quite different, right? Singapore, there used to be some workers travel to and fro from, say, Johor Bahru. You're familiar with that?
Yeah.
You cross the border, you stay in Malaysia, you come to Singapore. is like on a daily basis, commuting on a daily basis. So of course, with the COVID, you can't do it anymore. Certainly, a lot of people are still working from home at the moment. But I suppose after a while, you will slowly adjust to having a higher percentage of the people coming back to the office itself. Okay, now another one, CME certainly offered a lot of contracts that allows people to participate, whether it's indices, currencies, treasuries, agriculture. As the world's biggest futures exchange, you have lots of contracts. So you mentioned a few like indices just now. You also mentioned about crude oil. So are there any advice on certain contracts that you felt that you want to point out so that, you know, traders, investors, they can look at them with the view of, you know, participating in these CME contracts to profit from this volatility?
Yeah, you know, it's a great point, and what I like to do is look at what our customers are doing. Let's look at what how other people are using our markets, and if we just want to stay in the commodity set, I think there's some great ways to look at how you know, people can position themselves, and for us, you know, the copper market has been the star of the year so far in Q1 and Q2. You know, copper futures are up 35% between this year and last year, with copper options up 40%. And again, you know, this is going to reflect both the Asia story of what's China doing, is the China market recovering. It's going to reflect the story about environmental pressures, because copper's meant to be one of the key metals in any of the complexes that involve battery-driven cars, or even wind power, or any of the things that are going to need electric transmission. And I think that's a bigger story than even just having the macro inflation piece. So copper's been a huge success for us. And I encourage people really to look at the options, because that lets you get so much more of a view perspective than you would just by trading the outrights. You know, and we've also seen our market share increase to 30%, and this is significant because people like the ease of the screen-based trading. You know, your platforms allow customers to see the real-time prices, to trade the liquidity that we bring into the Asian market, and I think that's something that's really worthwhile looking at. You know, the micro precious metals have continued to really be strong providers of liquidity and hedging for our clients. Micro gold futures are up 63%, and silver futures are up 2,000% in 1 year. And what this does is it allows the investors who maybe don't want to take a big position in the large contracts to be able to benefit from the liquidity and the trading that's going on in the larger pool. And yesterday, I'm really excited to say we launched micro crude oil. So that started out, and I know you're a big supporter of all our products, and we really appreciate that. But this allows, you know, the self-directed investor the access that the big banks have and that the big players have. And I gotta make a confession. You know, I'm a trader myself, but I don't get to trade CME products, and it's so frustrating to me because I have a brokerage account, and I wanted to take advantage of the silver market when it was going wild a few months ago. And I went and I bought a CFD, and I sat there looking at it, my little 100 ounces of silver, and I had to wait until London opened before my position got filled. And the whole time the market was moving, and I couldn't do anything about it until London opened. And you know, all of your investors could go in and buy that silver contract at CME the minute they wake up and trade it all day, and they could have been in and out of that position. And I remember at one point it was out of the money by like $130 before the market even opened, and I was like, this is crazy. So for me, I don't get to trade the CME liquidity and the bid offer spread, and I think that's a tremendous advantage for people who don't work for CME is to get that. And you know, the other things that we've seen that are really interesting this year are natural gas. You know, we were up 400% in certain markets in Asia in natural gas. And that's a product that requires less margin than the outright futures contract. And people are getting very sophisticated because there's a lot more gas leaving the US and coming into Asia. And then if we look at equities, there's been a really incredible run, as you mentioned yourself. And we've got micros in most of the main equity complexes. Now we've got the NASDAQ and of course the S&P. And these are really accessible contracts. So the E-mini equity options launched this year in August last year. And again, those are 1/10 the size of the E-mini options. And that allows customers to take these options positions on these markets that are moving, which with the certainty of paying the premium as opposed to having the flat price. So there's so much to do. And of course, you know, we were excited to launch micro Bitcoin futures on the 3rd of May. And this is 1/10 the size of a Bitcoin. And again, with the increase in prices, a lot of people got shut out of the market. And this allows them, and I know you've been really a great supporter of that product, and I think you're the #1 FCM we worked with in Asia for access to those products. So there's a lot going on there, but in the commodity suite, we've really seen a huge increase in the metals products, you know, gold, silver, copper, all of those in options and micros. And then in the equities complex, of course, S&P and NASDAQ have been our mainstays. And again, we've launched micros and micro options. So I think those are really good places to start.
Please, thanks for introducing and highlighting these contracts. Certainly, some of these micro contracts are very popular in Asia, right? Because we operate from different countries, range from Malaysia, Indonesia, and around the region, across the region. Some of these contracts are just nice. You need the contract to be small enough for the investors, for the retail investors, to because of the margining required. And then you mentioned about the equities. Like in Singapore itself, you can see that more and more customers are participating in the US stocks. And in fact, they are more on the US stock compared to the regional stock market, including Singapore itself. So certainly this is also the group of customers from equities itself. They will be very interested to participate in the US indices. So certainly look forward to have, you know, joint collaboration in this. Maybe one asset class that we have not touched on is the currencies. That's another very good, strong strength from the CME itself. Yeah. Is there any particular contracts that you want to highlight?
Well, what's really great about currencies is that there's a really powerful Asia international story there, and we're really proud in APAC to see so much currency trading before the major markets open. You know, we're doing almost 50% of the volume of British pounds. We're doing more than 50% of the yen and the Australian dollar, all before US opens. And again, that's on the strength of the investors here who understand the markets better. They know, what's going on in Japan. They have a really good idea about the commodity flows from Australia into China, and all of these are proxies for the trade flows and the inflation and the volatility. So I think the currencies actually has been a bit of a surprise success story for us. In the last year or so, we've picked up quite a bit of volume on the FX complex, and I think also, and you can help me out with this, because one of the things we really enjoy out of sessions like this is learning. We obviously have a very large complex that's U.S. based, but services the Asia market. And when I meet your customers and I talk to them and they tell us how they trade our products, that's so important for us to learn how to better serve our customers. And again, you mentioned the countries that you work in. We don't have access to Southeast Asia without partners like yourself. But in the FX complex, we've seen tremendous growth. So just quarter on quarter, we're up 30%, and year on year, we're up 22%. And that's significant because many times we know we're competing with CFDs, we're competing with cash markets, and we don't have the penetration sometimes into those markets. But what customers are seeing is that they can look at their equity play, they can look at their commodity position, and they can also trade the corresponding currency if they want to. And we're seeing the clients, especially the self-directed ones, show us strategies and things that really normally you'd see in a big bank trading desk. And that's also because the smaller size contracts allow the flexibility for customers to come in and say, you know what, I think Japan's going to have a really good month. Let me get some yen. Oh, and I also know that they're using a lot of natural gas because it's the summertime, and they need to power up their electricity production facilities. And these are things that Asian investors can see often much better than European or US investors. Plus the pure commodity plays. And again, the Australian dollar was ticking up. It was down yesterday, which kind of shows that there's potentially some pressure on the Chinese rebound. Is that going to be something that we, as Singapore-based people and businesses that are doing a tremendous amount with China, have a really good insight into? So I think that we learn a lot from watching our Asian clients trade these currencies, and we just want to have the platform and the reach through partners like you to be able to get their views and see how they're working. But that's not one of my areas of expertise, but we've seen a big increase, and we're really grateful for that business.
Okay. Yeah. Certainly, thanks for all the kind words. Certainly, we have been working with different exchanges, but CME is one of our, definitely considered our strategic partners and very consistent partner with Phillip. And thanks for introducing some of these contracts that are useful, that's good for our customers to look at. So perhaps with this, I've taken up quite a fair bit of your time. I know that we are going to have a Q&A session. There must be a lot of questions coming in. So I'll pass it back to Sri.
All right, thank you so much, Che Chern and Chris Fix. Big thank you for all your views. And now is the Q&A session. Audience, if you have any questions for our special guest or Che Chern himself, please head down to the question box, which you can find on your control panel. It's somewhere at the bottom. Head down there and type in your questions right away. And in the meantime, while our audience they are working on their questions, Chris, I have a couple of questions for you. Well, we understand that CME recently launched the micro WTI crude oil, which is the latest micro contract, which along with the micro gold and micro indices. Micro contracts, is this the trend that we're going to see in the future, or what is the value that it brings to their trader, a smaller size contract?
Yeah, I'm a NYMEX guy. I used to be on the trading floor. I'm a New Yorker. And what we've seen is that we've built a wonderful pool of liquidity, and we're very proud of that. And what we've seen is that the self-directed or retail investor is taking up a bigger and bigger piece. When you look at what's happened with Reddit, when you look at what's happened with the retail trading in the United States, people are wealthier, people are smarter, people have more information than they did when I was on the floor in the 90s, right? You couldn't really go in there and take on Exxon or one of these big oil companies that had all the physical. But today, the retail investor has instant access to social media, to platforms everywhere. They can take their phones with them and see how the market is moving. And we as an exchange want to be able to involve that investor base, because it's not the same old thing. And I remember, 20 years ago or something, you call your broker and you try to get a position done. He'd get you done away from the market. He would be in the middle. And now you have platforms like Phillip offers, which is instant execution. You go in, you do your trade. The bid offer spread is what what Trafigura is getting virtually. And I think that the market's changed so much that we want to move with it. And this push towards the micro contract is going to be there forever now. And I think, again, what we've seen is that we have many investors who are coming and they're trading the local exchanges, and local exchanges, we're partners with them, and they're really essential for the economies of all of the major financial centers. And sometimes, the traders are learning and they're trading, and then they say, well, I want to experiment and find out what it's like in the global market. Now, maybe they don't want to, go in for the full margin or the full size of the contract or the full exposure. So we want to have those investors come in and try their skills and see how their experiences are going to allow them to see things in our markets and trade them, and then eventually move to the bigger contracts if that's their preference. So we want to give the scalability, the access, but the main thing I think, especially for your investors to know is that these are massive pools of liquidity. And when they get into these positions, and they're going to get out. And a lot of the exchanges who are trying to float these micro contracts, they don't have the underlying liquidity. If you do a micro gold or you do a micro TI, you're sitting on top of the global liquidity pools that the big investors are trading, and you're going to get the benefit of all of that to improve your trading, and expand your understanding. And I think that's really what we're looking at. Plus, how could you ignore the phenomenon of what you've seen in the meme stocks? I mean, we're not the same, because obviously you have the grounded liquidity and the margining, but at the same time, that retail investor has come through, and I think it's something Phillip has recognized for a long time, and we're playing a little bit of catch up, but I think we're going to be very good at it.
All right, the next question. Well, Chris, since the start of this year, we've had so much buzz about the commodity super cycle. All right, some of the buzz might have died down a little, just a tad, but based on how the commodities have performed for this year, which ones do you think that investors should not take their eye off?
I think I've been really surprised by ags. The soybeans at 70-year highs, the oil crush. There's another great advantage you have in Southeast Asia, which is you understand the palm oil markets better than really anybody else. And when you look at the soy palm crush, when you look at these things, and I think also Asian investors understand what's going on in China with regard to the imports of beans, what's happening in corn. These are great spaces, and I envy the position that the people in Asia have, because they're seeing the news coming out of China the minute it comes out. They're knowing who's buying what, what's going on in the major trading houses, what's happening with Wilmar, what's happening with these big players. And that's a great position to be in. So don't take your eyes off the ags and what's happening with the pigs onshore in China. And this is exciting. And we've had a 60% increase in APAC. So just in Asia, we lead the world in terms of the growth in ags, in terms of the CME geographies. So that one has been a great surprise to the upside. And I would advise everybody, go sharpen your pencils and look at that, because I think there's more to come.
So it's interesting, Chris. What you're saying is that because we are in the same time zone as China, right? So
yeah.
China. So as and when statistics come out, actually we do have some advantage.
Absolutely. And there's so many people in Singapore that do business in China and fly to China, and they see the trends. And I think that's a great advantage, because for us, China's a mystery in the US. You see the big headlines, you see the Trump tweets and the things like that. But on the smaller level, you see a lot of the physical trade flows, and there's a big advantage.
Okay.
All right, we have a question. Do you see the threat of imported inflation from high Chinese producer prices to be an additional issue for U.S. equities going to the rest of 2021?
I think that this is my view is that the decoupling is gonna be a very interesting story, and I don't mean in terms of any hostility on the trade war side. I just mean that the recovery is going to look different in both areas, and right now what I'm seeing, it's exuberance in America. People are thrilled. I mean, we are all running around, going out to our events, and people are spending, and they're getting in their cars, and they're just, for the first time, and again, we've had the benefit of Singapore, where we've been out to the restaurants, and I have to say, I've just enjoyed being there so much by just being able to go to the boat quay and have a beer and appreciate the great efforts and the success that Singapore's had. And now I'm experiencing it here in the U.S. on the back of and I'll be honest, the vaccines. 350 million people vaccinated. There's an exuberance. And I don't know, I mean, China pushed further first, and they recovered very well. But again, we see some data now that's suggesting that China might be cooling off a little bit. Crude imports are down at their lowest point in 2021. Also, the PBOC yesterday announced that they're going to have banks reduce their reserve requirements, and that's stimulatory. So I think, as an investor, and again, I'm an investor too, I'm watching very carefully. My personal view, being here, is that the U.S. recovery is real. It is real. And China, I think, is struggling a little bit. And maybe it's because, Che Chern, you mentioned the interconnectivity with Southeast Asia. It might be that because of the other markets, Japan, Korea, that there's going to be a little bit of a hiccup, but I think I need your expertise there. But I will say, I believe the U.S. recovery is firmly rooted in a very strong basis. And even if we get, which we will, because I think this is the experience Singapore taught me, is that even when you're controlled, even when you have things buttoned down, there's potential for something like the Delta to sneak in and shake things up. That's going to happen to us. It is, because there's plenty of unvaccinated people, and it may do the same thing, which is to encourage people to say, you know what, I want my freedom, I want my liberty, I'm going to go get the damn jab, which again, I got in Singapore courtesy of the excellent program there. But people here, if you can walk into any pharmacy and get a jab here. So I think there's going to be hiccups, but I think the U.S. recovery is real. And I think I'd leave China to your expertise, Che Chern, because you have a lot more clients there.
But one thing I'm very certain is that a lot of the people are not wearing masks. So life has become very normal for them. They can do business travel in China, right? They don't really need to wear masks, right? Of course, on and off, you do have a bit of scare at the border towns, but otherwise, I think life really is getting back to normal. I think that's yeah, they certainly have recovered fast. We certainly hope that they can continue to recover, right? That will pull up the whole global economy as well.
Yes, I agree with you there. I mean, without the U.S. and the China and firing together, it's going to make it hard, because either one of us being slow is bad for everybody.
Hey, Chris, I have a couple of questions for you. The first one is, we've seen agricultural commodities starting the year with favorable full-year weather forecasts. How have things played out since then, and are there any lessons to be drawn from this going into H2 2021?
There are. I mean, obviously the historically high prices in corn and in soy are indicating maybe some concerns. First of all, is there going to be a big supply bump? China's been really buying up so much, especially U.S. corn and soybeans. But the crop is planted, but we're seeing a lot of weather patterns that are a bit concerning in the U.S. Where there's record heat in the far west. We've seen temperatures exceeding 130 degrees in California, and in Death Valley, and it's really early in the summer. So there's a lot of worries about what's going to happen in the Midwest. The corn planting season went okay, And again, these high prices are a bit suggestive of potential surprises down the road. I think a lot of the people I talk to, and of course here in Chicago, we're in the Midwest, and this is the soul of farming, is a bit of concern about how much longer the high prices can last. Are there enough bullish factors to keep them where they are? And the historic spread between the oils, the soy and the palm, is that going to last? So there's a lot of room there for analysis. And you hit on a good point, Sri, about the weather, that we're all experiencing differences and changes, and it's become more unpredictable. And we've had a big hurricane season last year. We've already had some weather events earlier in the year, and that's just the thing that makes the hedging and the position covering so incredibly important. So we've seen a lot of open interest in options. We've seen a lot of open interest in futures, which means that the market is delicately poised to absorb some potential weather events in the ag space. The other key, and this is where, again, you have such a great advantage, is what's China going to do? China's buying at 2-decade high levels in terms of corn. If that recovery, again, I think, Che Chern, your point about seeing a lot of normality come back, Chinese people like to eat, and the livestock industry and the things that are going to happen on the back of a recovery, people eat recoveries very quickly. You don't go out and buy a Ferrari, but you will buy better food for your family. So that's a really interesting thing that I would look to the investors to decide themselves. Do they believe that it's real? Are the people in China going to feel more open? Are they going to go to restaurants? Are they going to import more beans? Are they going to grow more livestock? Those are the key things that the market is looking at, and I think that you need to factor into your position taking.
It's interesting on this topic, Chris, because recently I think China mentioned about they are looking at whether the market is causing inflation to happen unnecessarily due to speculation. So of course one of the market they look into was the iron ore market. And it also brought us to start thinking of a few years ago. India actually went through similar thing. When the inflation gets high, some are saying that the speculators are the one creating, the volatile prices or the inflated prices. And the next thing we know is that they control the trading itself. They control the futures market or delist some futures markets. So this is something that we're also watching out, just in case there's policy impact in the financial market itself.
That is fascinating, and again, it is, and I think this is an important thing too to look at, which is the different philosophies about how markets are meant to be intertwined with the economy. And America, we're very open market. We don't want to tell or influence where the prices are going to go. It's going to be on the basis of supply and demand, and we understand. And actually, I guess we don't. I mean, China has a long history of developing their own markets, and they're looking out for the best interests of their people. But it is fascinating, and there are people saying, oh well, is the copper price going to be influenced, and what is going to happen to commodities? And there you guys are in the driver's seat to look at those things and say, if there's a demand push one way or the other in China, it's going to have an impact on the global markets. So we're spectators in that story as well.
Okay.
All right, Chris, last question for you before I let you go for this evening. Okay, well, we know the U.S., for many of the states, life seems to be closer back to normal. In the UK, Mr. Johnson will be announcing that the citizens can choose to not wear masks in public very soon, and OPEC is still working on a deal. What's the opinion on the assumption that the demand for oil will eventually return to pre-pandemic levels? Will it get back to business as usual, or will anything such as electrification, EV vehicles, change that assumption?
My view is that oil demand isn't going to come back as soon as many people assume, but that doesn't mean that oil can't go to $100 a barrel. And I think what we've seen is that there's been a combination push against big oil, like the investor action in ExxonMobil, like the court case against Shell, where a lot of the production is not being developed, especially here in the Midwest with the fracking and the Biden administration being a green administration. So I think that oil prices can go higher, but I don't think that demand is going to come back very quickly. And again, when I look at the difficulties now, and when we see travel corridors being established, and the first one I hope gets established is Chicago to Singapore, would be that would be a real signal about recovery in global travel. But I don't think it's going to happen quickly in 2021. However, one of the concerning parts that we've seen is OPEC is not getting along. And this rift between Abu Dhabi and Saudi is huge. And again, this is something unprecedented, challenging the leadership of the Saudis and OPEC. I think that's going to create tremendous volatility in oil. I think also because you don't turn a switch and then start getting the fracking, going again. And the investor displeasure is causing big oil not to go after developing those reserves that they need for future. I don't think the EV is going to catch up. We are going to be driving vehicles powered by petrol for a long time, but the story, I believe, is still volatility in the crude market based on these other factors, and I don't think we're going to see a quick recovery in air travel to influence the petroleum demand. So there's so many things transitory, like everything else we've talked about today, where I think there's exciting opportunities for investors, and there's ways to hedge those views. And we certainly hope you're going to do that with CME and come in through our dear friends at Phillip Futures. And we look forward to working with you and providing as much insight and opportunity to come into the markets as possible.
All right, thank you so much, Chris Hicks, for your wonderful views. And that was Chris Hicks, Managing Director, Head of Asia Pacific CME Group. And with him was Che Chern, the CEO of Phillip Futures. Thank you so much, gentlemen.
Thank you all very much. See you in Singapore.
Look forward to having lunch with you.
Excellent. Thank you very much.
Okay.
All right, thank you so much for being a wonderful audience. And if you have any more questions, please type them into the survey form right after this webinar session. And thank you so much for your wonderful participation. And do look out for our next Fireside Chat and upcoming webinars. Have a good night and stay safe. Take care.
Thank you.
Thank you.